your trading schedule will be completely dictated by what pair you're trading, your schedule outside of trading, and also your mindset, your psychology in the current present moment. These are all things you need to dive into, because without your trading schedule, you're not going to be entering any trades. You're not going to be looking at the charts. Making sure you have set parameters of when you're going to be trading is important. I'm going to delve into why. So to establish what trading schedule or what your trading schedule should look like, the most logical way or pragmatic way to look at this is ask yourself or look at what pairs you're trading. See, in a previous video, we mentioned USD pairs need to be trading New York session. London session can trade with GBP or Euro or Swiss franc. You can see where I'm going with the logic here, that your pair should correlate with at least one of the sessions. So if I'm trading GBP, JPY, I should be trading at least London. New York, obviously you can trade anything. It's very volatile. It's the most volatile session, most high volume session. So that is a no-brainer. But if you are trading London, there's no point in trading pairs that are purely based in Asia, for example. If you're trading JPY and you're trading maybe Aussie dollar, those pairs tend to move less in London because they don't correlate as much as they do during Asian session. So if you line up your pairs correctly, that will help dictate your trading schedule. Now, the reason why trading schedules are so vital, and one thing that I've learned in the past 5 months since the start of the year, is without a trading schedule, you just get lost in the charts. You end up thinking and going back to old ways where you think your time dictates your success. And it does in most jobs, right? But for trading, you get paid for your skill. You're in and you're out the markets. You enter a trade, it may last 5 minutes, it may last 20 hours. It depends on your style, of course. But my point is, your time on charts does not matter. What matters is you sticking to your plan and understanding just because I sit on the charts for 8 hours does not mean that I will be paid or rewarded. So once you remove that mindset, or to help remove that old mindset of working a job, for example, which I think everyone should be doing anyways, or have some other business venture on the side. Point 2, we'll get into that. You need to make sure that you have set hours. So the hours, for example, are, for me, depending on your trading style, of course, as well, is make sure each day you have a time to check the charts, analyze them. For me, in the morning it works. I'm based in the UK. I can wake up before London session, let's say 7 a.m, and I can mark the charts. It takes you 5-10 minutes, right? If you're trading 2 pairs, like try them, even 1 pair, it'll take you 5 minutes, if that, right? Then you can set alerts. Then you're done. Obviously, there will be data releases throughout the day. Check Forex Factory or Trading Economics, whatever you use. But planning your day using the data that's planned, news you cannot predict. Obviously, at the current moment, Trump and Truth Social go hand in hand with tariffs. So that's always a bombshell when it happens. But planning what you can control is when you wake up, the pairs you're analyzing before your trading session, and the alerts you set. From there, then you can crack on with point 2, which I mentioned, which is either a full-time job or other business ventures. Maybe you're running a business. These are outlets that you need to have. Otherwise, you will go back into your old ways from personal experience, where you put your time onto the charts and you rack up these hours and hours and hours, but you're getting the result. And then your psychology starts to go downhill because you're thinking, oh, I'm putting all these hours in, I'm putting all this effort in, but my results aren't there. It's different from the gym. It's different from a previous job. Why doesn't it work? And that's just purely because that's not how trading works. You get rewarded, like I said, for your skill, not for your time. So make sure you really hone in on your schedule, because your schedule is vital for making sure that you don't fall into that trap again. So if we have London session coming up at 8 o'clock my time, I know that if my alerts get triggered or if there's data releases, I can plan my trade from there. Simple as that. I don't scalp, I usually day trade, meaning I usually try and enter on the 5, sometimes 15 minute. Once my alert gets triggered, I check the charts, and I have that time where I'm able to check the charts. If you're not able to check the charts because of your job, then you may have to swap your strategy or find ways around it. You know, there's ways where you can hide what you're looking on the screen or go into the toilet, etc. All those coffee breaks. There's ways you can get around it. You just have to be intuitive and think about how you can really do it depending on your situation. But like I said, it's vital to make sure that you don't just stare at the charts. And I've made this mistake this year already, where you go down a dark spiral, you put all this effort in, you're treating it like a full-time job. It just doesn't work. And a great example or an analogy I can give is, do you think a football player plays a full match, and football is soccer, by the way, for people that don't know. Do you think a football player goes into a pitch, plays a full 90 minutes plus added time, and thinks, you know what, at the end of the match, I can still go for another 6 hours? Of course they don't. Their job is to get on the pitch, do as well as they can at that time in the current 90-minute period plus added time, and that's it, they're done. All the other work is done through the training they do, which is each week, and that can be related to backtesting and trading or analyzing the markets. You're not on the pitch, you're not actually getting paid, but you're still doing or improving the skill that you have honed in on. The trading execution is a small part of it. It is what you do around that trading execution that's important. It's the same as a football player. Same as a boxing match. A boxing match can last, 6 rounds, 9 rounds, 12 rounds, 3 minutes each, right? All that effort, and let's say it's a 36-minute match, 12 rounds, that 36 minutes is all purely dictated from all the training before, from the weeks of ruthless training camps. They don't think at the end of the box match, you know what, I haven't done my 8 hours today, I can keep going. No, they don't. They've done weeks and weeks and months of training to get to that point. So you need to swap your mindset from the usual 9 to 5, I'm here for 8 hours, done, clock in, clock out. You need to just zoom out, focus on your skill, and make sure your trading schedule lines up for specific time frames of when you should trade. Because without that, you're going to keep going down that normal route.